Big day for the markets. The Dow closing at a new lifetime high, smashing a record set last May. Let's go to Timothy Anderson of TJM Investments. He is a managing director. He is at the New York Stock Exchange. What do you make of the big market day?
Well, it was certainly a great day all across the board. And, it wasn't even a wildly euphoric, out-of-control day. I think that's positive because, you can't really say that we're, like, extremely overbought, although we may be getting a little overbought on a near-term basis. The transports have rallied maybe 10% from their lows a couple of weeks ago. The Dow, the S&P make a new high. The NASDAQ is set up to potentially threaten that later in the week or maybe next week if the rally continues.
What do you make of the inspiration here? Because we had heard how bad earnings season was going to be. Brexit was the end of the world, and here we are hitting new records. How do you put all that together?
A lot of it is there's a lot of demand for yield from around the globe. Yesterday, a lot of the buying was focused in the yield stocks. The S&P outperformed because it's got a higher yield than maybe the NASDAQ does. In fact, I think as of last Friday, the yield on the S&P 500 was higher than the 30-year bond for the first time since the global financial crisis. So you definitely have a lot of yield buying. You have a lot of buying in some of the more stable consumer staple names. You had maybe some profit taking in some of the utilities today, as you had a little bit of profit taking in the bonds. But you've just got tons of cash that has, I'm not going to say there's no alternative. There are minimal alternatives if you don't want to have 0% return.
Rather than saying that this is about fundamentals, that people looked at the jobs report last Friday and they're like, wow, maybe I misjudged the economy. It's not that. It's the fact that you got to put it somewhere. There's nowhere else but the stock market, and this is sort of the best place to go find return. Is that what you're saying?
There's no doubt that the jobs report last Friday helped a lot because it made people feel that the economy is on better ground than it looked like from last month's job report.
Which
and a
was
lot
awful,
of people's
right?
And a lot of people feel that despite the fact that the economy is doing better than we thought it was doing a month ago, the Fed's probably still not going to raise rates until at least September. Now, I think they'll probably have a heated discussion about raising rates at their July meeting at the end of the month.
Yeah.
But the odds are probably still that they won't.
Yeah, I agree with you. I bet they don't even raise before the election, but we'll see. Tim Anderson, thank you so much for jumping in front of the camera on this big markets day. We appreciate it.
Sure.